This is your LMAX Exchange technical update for Wednesday, May 24th, 2017. Euro dollar. So the euro was pulled back a little bit after showing a bearish reversal day on Tuesday, but at this point there's no reason to expect that the pullback will be anything too meaningful, and the market is still focused on trading higher to fresh 2017 highs up towards next key resistance in the form of the August 2016 high over here at 113.67. If we do see a pullback, that's quite legitimate and possible on a short-term basis, and the pullback could even extend down towards previous resistance by that previous 2017 high over here at 110.20 before the market puts in a shorter term higher low and continues along the path towards the top side and towards that 13.67 next objective. At this point, it would take a breakdown all the way back below a confirmed higher low at 108.40 to negate the current constructive outlook for the euro. Sterling dollar. So cable has traded up to fresh 2017 highs recently, and the focus now over the medium term is on a push towards a measured move extension that comes at 135. 135 also coincides with some medium term support back in 2016, and the reason the market is focused on this level now is following a break of a period of consolidation that was about equal in size to this move that we've seen a consolidation off the 30-plus-30-year low from 2016, October of 2016 to 1840. That was roughly in between the 120 to 127 area. And so if we project that move, that seven big figure move to the top side on the breakout above the 127s, that takes us up to the 135 area. And so that's where we're looking to be headed in the medium term. At the same time, this doesn't rule out the possibility for some form of a short-term corrective pullback, and that short-term corrective pullback could extend easily back towards the 125 area even without even compromising this newly adopted constructive outlook. Only back below over here 2360, that low that we had seen going back to earlier in April, would compromise this newly adopted constructive outlook for pound dollar. Dollar yen. So dollar yen has seen a bit of a bounce in recent trade out from recent lows that we saw around 110.20, but at this point the market is just chopping within a consolidation between some key resistance and support above at 114.37 and below down by that recent 2017 low just shy of 108. So it's difficult to determine which way we might break right now given that we've been bouncing, but at the same time given the fact that we've stalled out below 115 at 114.37. Ultimately the bias does favor the downside following the breakdown from that 114.37 recent high, which still leaves open the prospect for a retest and break of the 2017 low going back to the 17th of April down at about 108.13. Again, only back above 114.37 would officially take the pressure off the downside. Euro Swiss. So Euro Swiss has recently traded up towards key psychological barriers at 110, but has been unable to break above that barrier, which keeps the medium to longer term pressure right now on the downside. While we hold below 110, there's risk for a topside failure and breakdown back towards recent range support in the 106s. At the same time, if the market establishes above 110, it would suggest a significant structural shift and pave the way for more upside over the medium to longer term. So 110 is the key level to watch right now. Above. Below, you want to pay attention to a recent low around 108.65 with a breakdown below 108.65 to strengthen the bearish case and accelerate declines. Aussie dollar. So as we've been saying, the recent gains that we've seen in Aussie over the past several days have been viewed as corrective, with the market seen putting in a lower top ahead of a bearish continuation back down towards eventually that December base at 71.60. The market has recently stalled out, as you can see here on Tuesday, with the market trading up to as high as about 75.18 before reversing course, and that again, that ideal lower top is now sought out somewhere around current levels, around these levels here where we put that high in favor of that bearish resumption. But if we still see the market head higher, it wouldn't change the bias, it wouldn't change the outlook, and while it holds below 76.11, the pressure does remain on the downside and the outlook is bearish. Only back above 76.11 would compromise that outlook. Dollar CAD. So dollar CAD could now be finally putting in a higher low following a period of multi-day correction to the downside, but the market overall is confined to a uptrend, and the market could be looking again for this higher low here following that bought low that we had seen in recent and Tuesday trade around 34.55, and this will be confirmed if the market continues higher and pushes back above that recent 2017 high at 37.94, which will open the door for the next key measured move extension towards that psychological barrier at 140. With dollar CAD only back below 132.20, lows going back to the 13th of April would compromise the constructive outlook. Kiwi dollar. So despite recent gains in Kiwi dollar, while the market holds below this resistance here at 70.90, the pressure does remain on the downside, and rallies are viewed as corrective in favor of the next downside extension below the recent 2017 lows at 68.18 and towards 65 further down. SPX 500. The S&P 500, despite a minor blip and a pullback in the previous week, has recovered very nicely, and the focus continues to be on the top side, with the market potentially seen pushing up to fresh 2017 and fresh record highs beyond the recent high around 2406 and towards what is a measured move extension now at 2480. At the same time, if the market could break down below 2322, that low that we'd seen back on the 27th of March, it would suggest a significant structural shift and put the focus on the downside. But that's a big if right now, and while it holds above that level, the pressure clearly remains on the top side, and the risk is for fresh record highs. Gold. So with gold, the market has been basing out since 2016, putting in a series of higher lows and higher highs, and most recently the market stalled out into that pullback around 1215 with a higher low now naturally sought out in that area, which will be confirmed on a fresh upside break beyond the 2017 high at 1296, exposing a retest all the way up at the 2016 peak at 1375. Only back below this recent low that we saw in the 1215 area would delay the constructive outlook for gold.